All right, let's take a look back at this day in history. Back in 2008, when Lehman Brothers, the fourth largest U.S. investment bank, became the biggest bankruptcy filing in history. The 158-year-old firm, which has survived the railroad industry turmoil in the 1800s, the Great Depression in the 1930s, and the collapse of long-term capital management in the 90s, finally succumbed to crisis itself, the subprime mortgage crisis that it, in effect, helped to create as one of the biggest underwriters of the asset-backed securities that were being crafted with looser standards out there. Rising homeowner delinquencies fed into collapsing mortgage bond valuations, which of course fed into a global liquidity crisis, which fed into what would become the greatest recession since the Great Depression. Lehman, which employed about 25,000 people, listed more than $613 billion of debt in its Chapter 11 petition, dwarfing by more than fivefold what had been up to then the largest bankruptcy ever, and that was WorldCom's 2002 insolvency. Lehman's filing the Monday morning of September 15, 2008 came a couple of days after the Fed declined to guarantee its loans, as it had done for Bear Stearns just 6 months earlier. And it came after talks for a lifeline from Bank of America broke down. Bank of America the day before would actually agree to buy the struggling Merrill Lynch instead. So amid all the talk then of banks being too big to fail, Lehman curiously became the bank singled out as being okay to fail. Now, there's not enough time to go through all that why, but the episode, along with the other near financial failures of 2008, reshaped Wall Street, reshaped our economy, and reshaped our national politics. Funny enough, the Lehman bankruptcy is still not fully resolved. The liquidation that began 17 years ago is still going. Court proceedings for Lehman's brokerage business, that finally closed out in 2022, but the parent company is still a bankruptcy estate as litigants and lawyers continue to sift through its remaining assets.